Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host, Shana. Thanks for tuning in today. We are live here. If you're listening at the live time, which is 8 a.m. Central Time, 9 Eastern Time, we'll be here for a whole hour. So if you've got questions, give us a call, 610-363-1110. Maybe you're tuning in for the first time and you wonder, well, what is this program all about? We are a stewardship ministry, and our calling is to educate and support the saints of the church as we teach and encourage you to be a good steward of all that God has given you, reminding you that He owns it all. We're just managers, and to please God, we want to be the best steward that we can be. So if you've got questions, I know that's a broad topic, but if you've got questions, give us a call, 610-363-1110. Specifically, our area of expertise is defunding darkness through biblically responsible investing, which is a strategy we put forward for our partners, and funding the light, encouraging you to be a joyful, generous, and obedient giver, and helping you to structure your assets, your investments in a way that you can efficiently and generously support the work of the Lord in the earth. Our number, 610-363-1110. So on today's show, we're going to get caught up on some of the economic and market news. And, of course, we're going to get encouragement from the scriptures. We'll be in Ephesians 5:1 today, and we'll answer your calls and questions. So 610-363-1110 will get you first place in our call queue. Well, Wall Street wrapped up the week with an impressive rally last week, posting its second strongest weekly gain of 2025. The S&P surged almost 5% last week, making up ground after a shaky start last Monday. Markets rallied for 4 consecutive days, largely driven by improved sentiment after President Trump notably softened his stance toward Fed Chair Jerome Powell and took a less confrontational tone with China. This week, attention will turn to a flood of earnings reports coming from some of the market's biggest names. We'll hear earnings report and hopefully some forward projections from about 1/3 of S&P 500 listed firms. So they are 1/3 of the S&P is slated to post returns by the end of this week. This is what we call earnings season. These results could set the tone for the next several weeks. If we get strong reports, which is pretty likely, but more importantly, strong forward guidance, which is less likely as companies are less certain about how tariffs and trade policy are going to impact their bottom lines going forward. But if we get strong reports and strong forward guidance, we could see the market propelled forward as it has been recovering from the slight correction that we saw. But weak earnings reports could easily start the next leg down, and more likely it's not going to be the earnings report, what is reported to have already happened, but less visibility going forward. Meanwhile, we're seeing some interesting signals from the bond and the currency markets. The dollar has been trending lower, suggesting a rate cut might be back on the table when the Federal Reserve meets again in June. Inflation remains uncertain, and the labor markets will be in the spotlight again this week as we get the jobs report. If unemployment starts to rise, President Trump will have more arrows in his quiver to shoot at Powell, or Mr. Late, as Trump called him last week, to publicly pressure him for rate cuts if they don't come fast enough. Now, Mr. Late wasn't exactly as witty as the other nicknames that Trump usually comes with, but
they call him a loser too, Shannon.
Yeah, he did. But pretty accurate.
Yeah, right.
Not necessarily idiot or moron. I think that's been another one, but Mr. Late, if the shoe fits,
Right. A spade.
Over in energy news, the Trump administration recently celebrated the launch of new offshore oil drilling in the region now officially and wittily named the Gulf of America. So, rolling back regulations and opening new production capacity will be a long-term positive for energy prices and for American energy independence. That's why Trump was elected on the campaign promise to drill, baby, drill. Even common folk understand this. Oil prices continue to drift lower and will be helped by a joint venture with Chevron, a Texas company, and a French firm, Total Energies, and is expected to produce 75,000 barrels a day, which is a good start towards Chevron's company-wide goal to produce 300,000 net barrels of oil a day from the Gulf of America through 2026. This is important. Cheaper oil helps contain inflation across the board, since energy costs touch virtually every product that we buy. More American production also makes it harder for bad actors around the world to fund their agendas by selling cheap sanctioned oil and manipulating oil prices. Yes, even the plastics and the paint and so many components of the green things like EVs and windmills are made from petroleum products. Not to mention the diesel generators that run lots of EV charging stations. Bonds, for now, are chopping sideways without a real clear trend. But that could change soon as the Treasury works through the challenge of refinancing trillions of dollars in existing debt. This refinancing pressure could influence interest rates. It could influence liquidity and definitely could influence investor behavior in ways that the market hasn't quite fully priced in yet. Refinancing $9 trillion, and I say refinancing because we have around $9 trillion that's going to come due in the next 12 months for the federal government. Federal government doesn't have the money to pay it back because we're operating at a $1.5 trillion deficit. So we're going to have to borrow more money just to refinance and to pay the interest on the $36 trillion. This is going to create a lot of supply in the bond market. And it looks like we have waning demand as central banks continue stockpiling gold instead of U.S. treasuries. So let's talk about tariffs and their real-world effects. I've got a chart to throw up on the screen there. The U.S. government collected a staggering $15.9 billion in tariff revenue so far in April, and it's not even the end of April. We're close. April 29th. But remember, April 2nd was Liberation Day when these tariffs went into effect. So just 27 days into it, the U.S. government collected $9.6 billion in all of March. So over what it collected in March. That's a huge month-over-month increase. It's still too soon to tell conclusively who is going to bear the brunt of the tariffs. Will it be the American consumer and just have those costs passed along? Will it be foreign producers who are going to be forced to negotiate the sale of their products into the United States at a cheaper rate because practically it's the importer who's responsible for collecting and paying the tariff. So what happens is they negotiate lower prices from the places that they're buying from. But we are getting some early clues. According to real-time data from Trueflation, which measures millions of data points of things that we buy on a regular basis, inflation is actually lower now than it was at the end of March. Today's real-time inflation, according to Trueflation, sits at 1.54%, well below the Fed's 2% target. Compare that to 1.8% March 30th. So despite the sharp increase in tariffs, we aren't seeing major price hikes show up in the consumer inflation data yet. Still early. China is turning around shipping containers and shutting down factories that will impact the supply of those cheap goods Americans have become spoiled to. Maybe time to shut down your Temu or your Sheen accounts, because now you're going to have to pay close to American-made prices for the junk that they exploit their people and export to the United States. They've announced huge price increases. In addition, behind the scenes, the pressure is building. Some retailers like Walmart are trying to absorb the cost of tariffs themselves rather than having to pass them on to consumers. Other companies like Albertsons are reportedly telling their suppliers that they simply won't accept price increases that are tied to tariffs. Consumers are likely to stay on high alert for these price hikes. Stay tuned. I've got a few more thoughts to wrap up this section here. We're going to come back right after this break, and our phone lines are open, 610-363-1110.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone, and ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. 610-363-1110 is the phone number that will get you first place in our call queue. So if you've got a question, give us a call. We're here live, waiting for your call. Well, before the break, I was talking about the impact of tariffs. It's still undetermined whether consumers or suppliers or companies or a combination of all of the above, which is the most likely scenario, are ultimately going to pay for the tariffs. Consumers are likely, though, to stay on high alert for price hikes. After years of Bidenflation squeezing household budgets, most families simply have no tolerance left for high prices. We are going to be watching very closely, and many may start intentionally looking for American-made products as a way to avoid imported goods that would carry these higher costs. I know my behavior is already changing. Personally, if I have to pay more for a product because of tariffs, I'd much rather that money go to the American business, especially the small business, rather than the federal government, who we've learned by the efforts of DOGE just is absolutely horrible at appropriating money in an efficient way, not to mention all of the money that just outright gets stolen from us. So I'd rather it go to American businesses, not the federal government, and certainly not to a foreign producer, especially one who hates us and is trying in every way to undermine and destroy and really conquer us. This mindset hopefully will spread if tariffs stay in place for an extended period of time. And here's an interesting thought to leave you with. One estimate that I recently heard suggested that if the U.S. were to collect around $600 billion in tariff revenue, that's a far stretch from where we are, it could completely eliminate the income taxes for 90% of American taxpayers. So that's the rhetoric that we're hearing from President Trump. It was, that he wants to eliminate income taxes altogether for people who make under $150,000. I heard another talking point that number is up to $200,000. So, I would say statistics tell us that 90% of taxpayers fall into this category. So 10% of taxpayers pay a tremendous, I think it's somewhere around 70 to 80% of the taxes in this country. So we're a long way from tariffs generating $600 billion in revenue, but it's a powerful reminder that tariffs, when targeted and structured properly, could become a meaningful part of reshaping our taxing system and rebuilding American manufacturing at the same time. So we'll continue to keep a close eye on all of these moving parts because there really are a lot. Markets, earnings, oil prices, bonds, inflations, tariffs, because they're all really interconnected. And together they're shaping the financial future that we all have a stake in. Interestingly enough, speaking of tariffs, I saw a headline come through just during the break there from CNBC that the White House on Tuesday slammed Amazon for reportedly planning to display the cost of President Trump's tariffs next to the total prices on its site. Caroline Leavitt, press secretary, said that this is a hostile and political act by Amazon. Be interesting to see the response here. We saw all of the tech titans, including Jeff Bezos, who isn't the CEO of Amazon anymore, but the founder, make pilgrimages down to Mar-a-Lago right after the election and contribute millions and millions of dollars to the inauguration efforts. Let's shift gears. Let's talk about something more positive and encouraging. Why don't we do our stewardship scripture?
Good call. Palate cleanser, Shana, right?
Yes, palate cleanser. Comes from Ephesians 5:1 today. Therefore, be imitators of God as dear children. Our stewardship verse today encourages us to be not intimidators, but imitators, tongue twisted this morning, of God as dear children. So it's been said, you become like the people that you spend the most time with. And Scripture absolutely backs that up. If good company corrupts good character, if bad company corrupts good character, then good company builds good character. And godly company, well, that grows godly character. Here's the stewardship principle. We can keep company, who we keep company with shapes who we become. And the best company we can ever keep is God himself. So when we walk closely with God, when we're in his word, when we're talking to him, when we're listening to him, when we're surrounding ourselves with his people who are doing the same thing, it changes us, and it changes us for the good. It trains us to live lives of love, just like Jesus did. So if we want to be better stewards, which is one of the main focuses of our ministry, if we want to be good stewards of our time, our money, and our influence, it starts with who we're imitating. And Ephesians 5:1 makes it crystal clear. Imitate God, just like beloved children imitates a loving father. Today, let's ask ourselves, am I keeping company with God enough? Because when we do, we're not just managing our stuff better, we're becoming who we were created to be. What do you think, Seth?
Shana, that's really good. When we're thinking about that idea of, who you're with has a tendency to affect who you are. I think it's really important when we think about this verse here. We want to be like God, but a huge part of that means not only we're in his word, but we're also surrounding ourselves with people who are like God. There's great wisdom in being surrounded by counselors and friends who also love God and are rowing in the same direction as you are. And so certainly, we can't get into just the holy huddle mindset. We have to be, ready to share the gospel with those around us. But at the same time, if your closest friends aren't people who love Christ and who love his word and who want the best for you and for your soul, it'd probably be a good move to find some other friends. We need to find people who love God as much as we do. And so I think this verse speaks to that. It's a simple command, Shana. We just need to imitate God. It's so simple. Not easy, but very simple.
Right. Not easy, for sure. As we think about our kids and who they're hanging around with, we need to think about that for ourselves, too.
Yeah, big time. Yep.
Are our friends making us better or worse? And are we making our friends better or worse? Because we are called to be salt and light.
Yeah, well said.
As well. All right. I think we might have time to get to our caller.
Yeah, sounds good.
Let's go to Nelson. Nelson's calling from Louisiana. Hi, Nelson. You're live.
Good morning, and I think I have a curveball question for you today. I have a Roth and a traditional IRA. I got rid of F22 in the Roth to rearrange some more growth in the Roth. So I didn't do a transfer in kind from Roth to the IRA. I used the cash to purchase higher growth stocks in the Roth. I'd like to get back into F22 in the traditional, but it's on the hold list. But since I previously owned it, it would just be like reinvesting money into it if I had kept it in the Roth. So like I said, it's a little bit of a curveball, but maybe this will help somebody else if you can say yay or nay.
Yeah, so in your case, normally we don't encourage people to buy off of the broad list. Since you already owned it and it was a hold, I don't have any problem with that strategy that you pointed out. But I would say since you did sell it, you did take that opportunity to sell it, maybe it would be best to take a look at the buy list as a way of replacing it before you decide to go back into it, especially if the money's going to be reinvested, did you say, in an IRA?
Yes.
Okay. So if you're going to be reinvesting it in an IRA, this one is a growth and income company. It is a little bit more growth-oriented than income-oriented. So it'll also depend on what your asset allocation, your portfolio tracker is telling you that you need. Maybe your portfolio tracker, since you sold it, is telling you that you don't need any more financials. I suspect that it probably is telling you that you do, since that sort of increased in the model that you're most likely following. So what I would do is I would go to that buy list and I would compare the company that you had with the companies that are there. I would look specifically at the income producing companies that are currently on the buy list, and then make your decision that way.
Right. I'm actually in the growth and income. I'm 67, been a partner for 8 years now, and I'm actually incrementally trying to increase my income, and I'm way low in financials. I'm about halfway allocated. So it was a good buy in the Roth, and it does balance growth and income. So I obviously watch the buy list daily, maybe a little too often. So for the financials, I am looking for more income than growth. So I'm gonna keep that on the side and keep watching the buy list and look for maybe a higher dividend payer before I increase that position.
Yeah, I'm looking at the yield on the one that you're asking about right now. It's 3.25%, and I know just off the top of my head that there's several in the financial sector that are paying a good bit more than that. So others that you could find?
I think I own them already, so I'm looking for a new one.
You're on top of it, Nelson.
Anyway, I knew it was a little bit of a curveball because I know we shouldn't buy off the whole list, but it was a unique position. So I'm going to keep watching the buy list, and I'll just be patient. I have a CD coming due on May 16th, so $50,000.
Nice.
So that will be a lot of free cash I can invest in higher dividend stocks. So appreciate all y'all efforts, and I spoke to Elijah. I thanked him for looking at the volume levels that we've had problems with, and he seems to have gotten it fixed. So kudos to the staff. Thank you very much.
Oh, thanks, Nelson.
Absolutely.
And Nelson, you know what's super cool too? Shana's a switch hitter, so you throw her a curveball, she just bats left-handed. It curves right into her, and she knocks it out of the park. That's how that goes.
Great, because she really gave a very good answer.
That's awesome, man.
Even Friday.
That's awesome. Thanks, Nelson.
Thanks, Nelson. We appreciate you so much. All right, folks. I hear the music. That means we're at the end. We're at the halfway mark through the show. We want you to stay tuned if you're listening on an outlet that carries the whole show. If not, switch over to one that does and get our phone app. Go to financialissues.org. We'll be back.
If you don't get life right, you're not going to get all the other issues correct, period. It is the issue that impacts every other issue. Life is the central part of what keeps this republic together. It is the contract that the founding fathers passed down through multiple generations. Life, liberty, and the pursuit of happiness. You don't have life, you don't have a republic. There is a temptation out there right now, and I want to just tell you we must resist it. There's this temptation that we cast this issue aside. How does that honor God? It doesn't. And if it wasn't for preborn, I would be super just confused and depressed, because there has never been, in my opinion, a more disjointed time in the pro-life movement. We need a machine to go up against the Planned Parenthood beast. Like, we have to play offense against the pro-abortion forces in this country, okay? We have to play offense. And preborn does it in this compassionate, merciful, godly way that is just so inspiring and amazing.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I learned how to pray to God. It helps me through my day. I will commit myself to learn more about God's Word, to be able to share the gospel to others. Jesus has been a big impact in our family. Now we go to church every Sunday. I see more happiness and less arguments. God's love is so perfect, I will not change God for anything.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachourschools.com.
Welcome back to Financial Issues. Thanks for sticking with us. We're continuing live here. If you're listening on a station or an outlet that carries the live version of the show, 610-363-1110 is the phone number that you can call if you've got a question. So the debate in Congress on the tax bill. The big, beautiful bill, as Trump often calls it, continues on. I did hear an interview from the House Ways and Means Chairman Jason Smith, and he didn't give away a lot of what is being discussed. He just kept saying that it's going to be very pro-growth and that the market is going to love it. So some of the things that I did glean out of what he said was he said that it's just days away, the House is just days away from unveiling the major tax bill, and that the goal is to get it passed, signed, sealed, and delivered by July 4th. I would say, knowing Congress's tendencies and history, that's a huge task for Congress.
Yeah, absolutely.
And don't they go on vacation around July 4th? Anyway?
Yeah, I think they do. Which is kind of ironic, Shana, that was the day, 250 years ago that our fathers fought against like a 1 or 2% tax, went to war. So,
yes,
anyway.
very, very interesting. Yeah. Freedom Day.
That's right.
Maybe we'll get some freedom from the oppression of taxes going forward.
Amen.
Or we might be headed towards another revolution.
Yeah.
It's amazing what ruffled their feathers versus what we've tolerate today. It's kind of like the analogy of that frog in boiling water, right?
Just doesn't even know. That's right. You don't even know the danger you're in.
So, their goal is to get it signed, sealed, and delivered by July 4th, and giving Americans a clearer picture of what's ahead before the election season heats up. I guess coming into we're already in the midterms. Can't we just enjoy the honeymoon for a little bit?
Right.
I don't know. It's been a pretty rocky honeymoon. You're already thinking about getting divorced, a lot of people. But so Jason Smith emphasized that this bill will be very pro-growth. He kept saying that over and over. He said the focus is not just on cutting taxes, but on expanding the economy to create higher incomes, more jobs, and greater prosperity. That all sounds very good from a bird's eye view. Now, it's based on the principle that growth itself will generate more tax revenue, right? So you can either raise tax rates or you can raise the base that taxes tax. So his idea, and the House and Republicans in general want to grow the base, not increase the rate. So think about it. Which one is better? More revenues taxed at lower rates, or less income because people lose their jobs and don't get raises, taxed at higher rates because there is no growth? It's sort of a no-brainer. I don't understand why a whole school of economics even exists on the other side. So more jobs, higher wages, stronger corporate profits will all contribute to higher overall tax receipts, naturally and sustainably. So the bill, of course, is going to seek to preserve and extend the tax cuts that we got under Trump's last tax policy, the 2017 Tax Cuts and Jobs Act, or TCJA. Instead of sunsetting key provisions like lower individual rates, businesses expensing, and higher standard deduction, this bill aims to lock them in while layering on new incentives to fuel further investment in innovation. So I heard one estimate that on the low end, the lower income earners, like say up to, I forget where it was, maybe the end of the 12% bracket, maybe $70,000 or $80,000. People who or households that make $70,000 or $80,000 a year could see somewhere around a $5,000 income tax increase if the TCJA went away, all the way up to the higher end of seeing up to a $10,000 tax increase. That's in 1 year. So think about right now the tax bill that you just saw and paid being $5,000 to $10,000 higher. That's very, very discouraging. And from what he said, kind of reading between the lines here, no tax on tips, no tax on overtime. Seems like it's still part of the bill, but no tax on Social Security sounded more like helping ease taxes on retired people. I can't remember his exact words, but reading between the line, I kind of thought, well, maybe that's maybe that's getting pushed aside a little bit, but I guess we'll see when it comes out. At the end of the day, though, we in this country have a spending problem, not a revenue problem. There are lots of people that are echoing that, especially President Trump. Everybody knows it. I mean, with the, I hate to say it, but I think people are sort of becoming desensitized to Doge and what they're uncovering every day. It's not even shocking anymore, which is a sad thing because it needs to be. It needs to stay at the forefront of this is ridiculous and we need to get rid of all of this waste, fraud, and abuse. Well, tax revenue under all kinds of different administrations and different tax laws has averaged over history somewhere around 17% of GDP. So GDP being what the economy produces, the government has taxed around 17% of that. That's what the tax revenues have been. Now, that hasn't changed much over time. It's the other part of the equation that has changed dramatically. Spending has historically averaged 20% of GDP. But under COVID, the COVID-induced spending spree that was unleashed and still not put back in the barn, we've been running at 26% spending of GDP. So for those of us who can do first grade math, we still see that there's a problem. If we spend 20 and bring in 17, that creates a negative number. But there are other sources of revenues for the federal government. Tax revenue is the biggest source of revenue, though. But we get revenue from assets like federal parks. Leasing or selling those properties could also generate revenue. Leasing them generates more recurring revenue than selling them does. So think, for example, leasing federal lands for oil drilling, for mining some of those rare earth minerals that we've been getting from China. Timber harvesting and also grazing. The United States could generate revenue from the leasing of all of those lands. This also includes offshore oil leases and mineral rights. And we have other assets like gold. Revenues come from Medicare premiums. Now, Part A is funded by the money that people have paid into the system for so long, but Part B and Part D of Medicare are paid directly by beneficiaries. Or, better yet, how about controlling some of the cost of health care? The government, as the largest buyer or largest insurer, negotiates the cost of drugs and procedures, kind of like people who use health sharing ministries do. We know that on a personal basis here at the ministry because we use Samaritan Ministries for our health sharing plan, and that works differently. It matters a whole lot more to you when you're actually paying the cost of the care. Now, getting reimbursed, from members of the community to do that. But when you're actually paying the cost, it makes you a lot more cognizant rather than just going to the doctor. A lot of us never even looking at the bill and what's being charged to the insurance company. We get sort of removed from that and desensitized. And the other big one, the other big source of revenue for the government, tariffs. So, I don't think it's sustainable to keep huge tariffs on most countries for a long period of time. But, as you can see from that chart that we showed earlier, it sure is helping shore up some of that income. Did I miss the ag report?
Amen. No, you know what, Shana? It's all good. You're on a roll there, and I know we got several. We might be able to get to a question here, actually. So, okay. Yeah, all good there. That is not a problem at all. We got a question here, Shana. Spencer is asking about opening a HELOC and paying on it. He says, I've been told by a peer that I shouldn't start investing until I pay that off. What do you think? I was wanting to take the money I can save and split it between the two. What would you say? Okay,
so a HELOC is a line of credit that you have against your house. So, that makes me wonder, do you just have the HELOC? Do you have a mortgage in addition to that? What does that look like? So I'm a fan of starting the discipline of investing as soon as you can. We did a really great piece. Was it yesterday? On the time value of money and starting early?
Yes, it was yesterday with Jason. Yep. It was
Jason
great.
and I talked about that. If you missed it, the great thing about the show is that you can go back into the archives and check that out. It was in the first half of the show yesterday. So I'm a big fan of at least starting the discipline. So let's say that you have $100 a month to make it easy. If paying down the debt is a much larger problem, maybe you want to put 70, 80, or 90% of your monthly budget towards getting your debt paid down, but take at least 10%, 20%, or 30% and start that discipline of investing, because time is the biggest advantage that you have when it comes to investing. Stay tuned, folks. We've got more financial issues to come. We're going to take a break, but we'll be back right after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
Hi, this is Shana Bird, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org and click on the Preborn logo. Save a baby, save a life.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. Well, Grant reminded us all on the break that Craig and his wife are traveling. They are on vacation, so we don't actually have an ag update today if you were missing it. I would say just pray for Craig and his wife. Pray that they would have safe travels and a wonderful time as I forgot where he said he was going, but
he's going all over the place, Shana. He's like anywhere that's not the United States, you can pretty much find Craig there. That's basically what it is.
I want to say it was South America.
I think it is South America.
Yeah, that's what
down the southern tip of Chile, I think. So pretty exciting stuff. If we have any listeners in Chile, say hi to Craig for us.
Yeah, absolutely. So yeah, pray for Craig and his wife that they have a wonderful time.
That's good.
All right, we've got a caller waiting. Let's get to William. William's calling from Kentucky. Hi, William. You're live.
Hello, Shana. Again, I want to compliment you on the new website. It's a very positive asset and helps to manage my portfolio. I had a question with the new allocation models with the higher percentage in technology. Is it okay to have more than one company in an industry, or is it best I'm underweighted even with several different industries covered, and I didn't know if invest in another company or go heavier in the ones that I have.
Yeah, so we've got 9 technology stocks on our buy list right now. And kind of if you follow that rule of thumb, not a hard arbitrary rule, but of 3%, 9 times 3 is 27. So you could get up to 27% if you had all of them. None of our asset allocation models have 27%. So what our goal is whenever we're looking at adding companies to the buy list, we're looking at having companies in several different subsectors, so we don't have all semiconductor stocks or all software stocks. We try to get a good mix there. So combined with what you may already have, I think there's plenty there to try to diversify, even within the technology sector, to get a good mix.
Okay. Thank you very much.
All right. Thanks, William.
Thanks, William. God bless, buddy.
Yep. Yeah, I do love our new website. It is nice.
Me too, Shana. That's awesome. Nice. I'm glad that William loves it. Speaking of people loving FISM, we just got a great comment here from Stephen in Cleveland. Cleveland, Texas. I didn't know there was a Cleveland, Texas.
Oh, that's sort of close to me.
Yeah. There you go. So you learn something new every day. But Stephen's saying best investment ever, FISM, except Jesus, of course, super spiritual investment, best in life. Wow, that's awesome, Stephen. So the second best investment ever is FISM. That's pretty cool. But great. Shana, I mean, it really does speak to the value of the especially with the value of the FISM partnership with what you pay versus what you get. Pretty amazing.
Yeah, I think so too. I mean, we did have to increase our prices last year, but that was coming off of, I think it was 12 years where the price hadn't changed any. And I can tell you, in those 12 years, I think I've been a partner all of those 12 years, going back that far. But I can tell you that the strategy, the website, the resources have improved and evolved so much over that last 12 years. So to not see a price increase, I mean, I understand, where Dan was coming from. He wanted to make it affordable for everyone to be able to do it, to become a partner and be able to manage their own biblically responsible portfolio. But, none of us saw the 40% inflation coming from Bidenomics and just the overspending of Congress. It wasn't Biden alone. He was probably wasn't Biden at all.
Right. Yeah.
Come to what we're learning right now. Yeah. But when you're at the top of the food chain, your name gets stamped all over it. So, and you own it.
Absolutely.
At least in theory.
Yeah.
But no, it is a tremendous value because it's a way that people, I remember seeing a question, I don't remember where it came from. People wanted us to talk more about becoming your own portfolio manager. And, when you have the time available, when you have a little bit of time to invest, it's a good thing to understand what you're doing because, it's really ignorance that breeds fear. Ignorance is not a pejorative or a negative thing. Ignorance just means that you don't know what you don't know. So it doesn't mean that you can't learn it. And that's one of the things that we help people do. We give a really easy step-by-step strategy. And, we're working on adding new videos and new resources all the time to help break that down and make it even more simple. So, we give a framework for you to do it yourself. We give you the structure, the bones of it really is the asset allocation model. So our investment committee looks at trends that are happening in the markets, in the economy. We look at, which sectors are poised to do better during the part of the business cycle that we're in, and that will morph a little bit over time. Now, it's not trying to time the markets. It's not saying that, it's when the Mag 7 was in favor, we weren't 100% in technology. It's the times and the seasons change, not as consistently as the way that God set up the times and the seasons of the earth to change. We can pretty much put that on the calendar. But, there are a lot of things that a lot of moving parts in the economy and in the markets. And so those shift and move, and sometimes different sectors are in favor, sometimes they are out of favor. And more times than not, that is only clearly seen with hindsight. And we don't get to use hindsight when we're investing. We have to be forward looking. We have to look at, where we've come from. We have to make some educated guesses based on where we've come from and what we know about history, but we have to make some educated guesses about the future. And, that's how we do it. So you'll see our asset allocation models get slight tweaks from time to time. And of course, we reserve the option of going much heavier in cash or much heavier in a certain sector should we find that there is a compelling reason to do so. Because, we share a common belief in our investment committee that we have been heading as a country in the wrong direction. In fact, the world is headed in the wrong direction financially for a long time. We've got to, you can't make it make sense to spend more than you make on a long-term basis. Individuals can't get away with that at all. They either end up in bankruptcy court or having all of their stuff confiscated. And the same should be true. The same standards should be true for governments. We shouldn't operate like that just because we've gotten away with it for so long, because it is not sustainable on a long-term basis. And so, the things that we're seeing happening right now with the Trump administration, with trade policy, with tariffs, with tax policy, with regulations, and, basically what we're seeing is a shift of power and control from the federal government back to individuals, which was how it was intended. Government was never intended to be our God. And unfortunately, it has become that for so many. So many people are dependent on the government for a good majority of the income that they get through social benefits or whatever it might be. Many people are dependent on the government creating jobs. That's what happened under the Biden administration. They ran victory laps over creating so many new jobs, but all they did was, inject cortisol into a already bloated administration. You can't dig in ditches and going back to fill them in is not productive. Yes, it generates a paycheck, and we're a consumer-driven country, but it's not sustainable. If you're not producing anything, you can't generate income from it long term. So it's back to basics. It's shifting. It's empowering the individual more by, giving the individual more freedom to make and to spend the money that they're making, to choose how that money is spent, rather than having it spent on transgender operas and Sesame Streets and all kind of crazy things that Doge has uncovered that our hard-earned dollars have been spent on. It's just absolutely sickening, and it needs to stop. But, and I hate to say it, but Congress, I don't think, is doing that great of a job in securing some of the savings that we're seeing that Doge is uncovering. They're too busy trying to figure out how to re-spend that money, and it needs to stop. And we, the people, need to make our voices heard. So we need to be willing to endure the pain, a little bit of the pain that's coming. And, I have to say that individuals and companies, especially small businesses, are so innovative. When their cheese is moved, they go find it. They don't sit down and cry about it being taken away. There's a book called Who Moved My Cheese, if you've never heard of it. It's a short little book. But, that's what it's about. You can't sit down and cry and call the government and tell them to send you more money. You got to go find the cheese, folks. All right, we're at the end of the program today. So we hope that you learned something. We hope that you are encouraged. And we want to be here every day to remind you that God owns it all. Time's getting short. The Master's coming back. There's going to be an accountability day. And we want to help you be found a good and faithful steward. So come back tomorrow for more financial issues. Find out more about our ministry at financialissues.org.
If we ever forget that we're one nation under God, then we will be a nation going under.
Thank you for joining us. This has been an FISM production.